Hi, in this video I want to show you the top secrets for scalping. Of course, there are many people who come into the trading space and the first thing they're able to understand, or the first terms, is scalping. Like for me, for instance, when I just started trading, in my early trading career, I understood what scalping is. I understood the word, but not perfectly understanding exactly what is expected of me when I am scalping. In fact, there's this mindset that many new traders have. They feel that if they are a scalper, they are probably smarter than every other person in the market, not until the scalping system fails them and they're unable to make money. One basic truth you must know as a trader is, if you're scalping, you must know that your risk is higher than the one who is swinging or who is waiting for bigger moves, bigger risk to reward ratio, and good A+ setups. Scalping, just like the word scalp, is when you find moves that are not too big, too much, and you just quickly want to come inside the move that's not so big and carve out something small, increasing your leverage at least to an extent where that small move you catch will now give you the same reward that you'll be expecting to get from the longer moves. So in that case, what it means is that the risk still remains the same. And in that subject, what you are eventually doing is you are narrowing your trading vision into a smaller cycle, of which in that inner smaller cycle, if things goes wrong, then you're going to lose. So scalping, I must say, is better for professional traders, not for new beginners. But most beginners think scalping is best for them because they're new. Not until when I show you. Before I take you to the chart, I want you to understand these few basic things about scalping, so that when I start showing you from the chart, then you can be able to understand basically what scalping is. That will make you understand what we are saying when we are talking about scalping. Take for instance, you are looking at the charts and you're anticipating a move, and the chart keeps moving. Okay, so this is a pure trend. Okay, and then for some reason price does this and this. Okay, and this is probably where you are looking at the market and you're about considering to get into the market. So what you should be expecting to see is something like this. So you're going to expect that price comes, swipes this, okay, probably do this and give you a double bottom, retests up to this point, and then does something like this. Once you see this after these kind of areas where you know that liquidity is sitting, then just know that this is the kind of pattern that you should be looking out for. So such patterns should give you something like this, and it should bring you into another zones here where you need some extra confirmation, which I'm going to show you shortly before you aim for the target. So just like I would let you know, or will always tell you, this is the textbook way of looking at the charts. Okay, the textbook way of looking at the charts makes it look very easy, but when you look at the charts probably in a different way, you may not see it the way you're seeing it right now. It may be a bit different. So this is one pattern. There's another pattern you should be expecting when you're dealing with scalping. Okay, so another pattern is this. You may have price do something like this, okay, and price do something like this, and it may act like it's ranging, and all of a sudden price comes, fails here, breaks down, come again. So what you may be expected to see is that liquidity is on all these areas. So you may be expecting price to do something like this, but once you see this, anything down below this previous path where the impulsive move that led to this move came from is actually where you should be considering as your liquidity pool. So, and if you are moving in aggressively, you could go in from here. Okay, look for bullish candle confirmations. But if you're not going aggressively, then you wait for conservative confirmations, which is price should take out this structure, giving you a new structure shift before you consider the up move. So this is another pattern you should be looking out for. So basically two patterns you should look out for if you want to trade scalping. So I've just shown you what it looks like in the simple drawing. I'm going to take you to the chart so that I can show you what it is in real candle. Now in the real candle, price is not the way it is in the supposed price is not the way it is in the supposed drawing. Okay, because the candles can be like this. Okay, they are funny. You see something like this, see something like this, you now see something like this, see something like this, see something like this, see something like this. Okay, and what this means is you will need to understand structure, okay, market structure, before you can be able to reach such. Sometimes the internal structure is what brings the noise. So as a professional trader, you will not pay attention to the internal structure. You just pay attention to the higher points, the lower points, higher point, lower points, and it helps you to be able to understand the structure shift areas and the trend continuation areas for you to understand that chart. So quickly, I will take you to the higher time frame because I would love to show you a few on back testing, so you can be able to play what I just showed you now on the drawing of what you could possibly do with, scalping. So quickly, I'll go to 1 month time frame. Scalping, you have to go down to lower time frames. Like you do analysis on the 15 minutes time frame, then you look for your entries in the 5 minutes time frame. Then you're either taking in from the 5 minutes time frame or you're looking for a clearer move in the 1 minute time frame. So now that I'm coming to the 1 month time frame, it's because of the subscription. I have not subscribed on my trading view, so because of that I'll be using the free subscription, which is the bigger time frame. Okay, so I'll cut it from here. Then I will assume in this particular teaching that the 1 month is the 15 minutes time frame. Okay, so if this is your 15 minutes time frame, then what you're going to be looking out for, like what I told you already, is you're going to look out for that chart pattern. So if this is 15 minutes, first of all, in the 15 minutes, what you want to see is market structure shift, and you draw out your supply and demand zone. Then you go down to the 5 minutes time frame. So in this case, 1 week time frame will be a 5 minutes time frame, and 24 hours time frame will be a 1 minute time frame. Stay away from 1 minute time frame if you're not a pro trader. You're going to have issues with that. So let's just look at and see if we can see a market structure shift as we are playing this particular replay. So quickly, we just wait to see. Let's see. So if you're a trader and you know what you're doing by now, you should have been able to understand this structure. It's simple. So first of all, you look at the previous break of structure, and if you look closely, you find that this is the previous break of structure. Okay, so if that's your previous break of structure, then all it simply means is that the market is actually supposed to come to this zone, of which it has already done that, which is the closest supply zone. Market has already done that already. It's tested it already, so that zone is mitigated, even though it was still strong enough to hold, confirming now that liquidity is on this zone, because we can see price reacting on that part twice, and that's most likely where the retail traders are going to be going in to the market. So what do? Let's spot more supply zones. So we have this one here, being that this is the recent high that gave this impulsive move, and then we have one here that may not be that strong because it's been mitigated, but let's just mark it in case it's able to hold price. Then there's this rejection on this part, so I'm just going to play now, and let's see what price will do if it could give us the structure that we are looking for to consider. Okay, so now price has taken out this structure. Okay, so as a trader or one who is trading supply and demand zone, the strategy that I use is the institutional order flow. What you need to do is you need to mark out your supply zones, but this is obviously a downtrend, so we're going to be looking for bearish entries. Now supply zone has been marked, no demand zone yet, because if you want to do that you have to go for higher time frame. But for this time frame, what you're seeing is what you're dealing with. If you go to the 1 week time frame now, which is supposed to be your 5 minutes time frame, that place you will now begin to find the closest zones, okay, which this is supposed to be, but it's already mitigated. There's another one here, okay, for this trend, and then there's another one here. Okay, so if you look closely, you see that price is doing exactly what I just told you about. I said look out for what? You look out for something like this. You see that price did a trend up, okay, and then suddenly it shifted, did a trend up, suddenly shifted, gave a new structure. It's currently forming downtrend, okay, and has given that signal what I said you should be expecting to see. But for you to go bullish with such entries, you need this structure to change before you think of going bullish. Until then, do not go bullish. So let's see if we're going bullish here, since our market structure shifts, or we're going bearish. For this case, market structure has shifted downward, we should be going bullish, not bearish. But let's see if the market will continue bearish or bullish. So we're waiting for either a bullish confirmation or a bearish confirmation. So currently you giving us a clear signal that we may be going bullish. Okay, so all we need to do is to just look out for demand zones. So that supply zone has been taken, this one was mitigated, So what we need is a demand zone now. Okay, so this is a demand zone. In fact, this is a breaker. It's a breaker block. So we'll just wait and see what price does. So if price returns back into that zone, then we can decide. Okay, so if you look, you see what price is doing. So it's simply forming small moves, which is why scalping is important. So what you do, you go to the 24-hour time frame, which has broken down the structure. You can see it's forming small moves. So instead of waiting for the big moves, all you just need to do now is to pay attention to the small moves and look for how you can go in. So if you look, you see that it's a small move where it's giving us entry from here to this possible supply zone. So what do? You just come, you mark your demand zone on the lower time frame, okay, and then you wait for price to give you a liquidity sweep. Okay, that's already happened. Okay, I wish I could take it back again, but what I want to show you is you wait for price to give you a liquidity sweep, of which if you look closely, you see that price came down, came here, rejected, pushed up, rejected again, came to this middle, gave a liquidity sweep, tested in the demand zone, okay, then pushed by giving us an impulsive move. So where should have been your entry? If this didn't move as fast as I expected, your entry for scalping is supposed to be just somewhere around here, and the target just up. You must touch this because it's been measured already. And your stop loss should just be just a little bit below the previous low. Okay, so make sure your risk to reward ratio is correct. You must target at least ×2 of what you are risking. So let's say this is 219 based on the measurement I have on this time frame. If you measure from that point upward, you should have 400 and something, which is 500. So this is clearly 2 plus RR, which is 2 plus risk to reward ratio, and that's a perfect entry for what I just explained to you. And this move can basically and actually give you sharp entries and make you make some good money. Okay, so right now structure have shifted bearish, so I think we can actually quickly catch a bearish move as I round up on this particular video. So let me just give you a bearish example. So this is a supply zone. Okay, so all you need to do is you wait for price to go mitigate that supply zone. Well, price just kept running down. Okay, this zone has been tested, so let's just take it out. Wait for price to go. Let's get another supply zone. So this one has been mitigated, but this one has not been mitigated. So you wait for price to go in there. Okay, so price tested the supply zone, but I'm concerned there's already a market structure shift here. So okay, so let's say there's imbalance here, so you can sell in an imbalance. So you wait for price to, okay, this is the liquidity sweep. Okay, so to be sure that price is not still going up, you just need to just wait for this structure here to shift. Once this structure is shifted, then you know that price is now going bearish. Okay, if that doesn't happen, then we're still going up. So you see, so you have to wait, and that's one part of trading that you must discipline yourself on to understand. Waiting. So you see, price didn't shift it yet, so it went to grab more liquidity. Now price has shifted. So now that price has shifted structure here, what you do is your entry will now be somewhere around here. So after price shifted structure, you just need a supply zone after the shifted structure for you to be able to know exactly. So you're targeting the next demand zone, which is this other block here. And you just don't trade at all. If you don't stick to 2R, you don't trade at all. Choose quality over quantity. So this is the first order block, okay, that can be considered as a supply zone, and this is the second order block that gave this impulsive move, and none of them has been mitigated. So those are the two places and areas where we should be considering to take price. So you find that price tested this, gave a liquidity sweep, okay, and that liquidity sweep could just be your entry. So in this case, since we're not risking much, you could just put our stop loss here. Okay, but in this, okay, yeah. That's not perfect because this was shifted. So all you need to do is wait a little bit. Liquidity has been swiped here. This has shifted structure. So you need another shifted structure to consider that entry as bearish. Okay, of which this has given us what I just said. So this should be the entry now. So if you see, this is a shift here, and after that shift, the next place possibly to consider is this, because the other one has been mitigated. So possibly you could just put your stop loss a little bit higher than that, and your take profit should be on the next. This has been mitigated, so you could target this. It gives you decent 2R, or you target this. This will give you, I think, 4R. Okay, this is just perfect entry, which is what we say quality over quantity. Well, in that case, this failed. So that means we were wrong with this entry. You will not always be correct. Okay, so let me show you this now. So that means this is a bullish move. Okay, haven't seen this. So the bearish confirmation there is wrong, which is why I always say you wait for a structure shift before you consider entry. So this was not actually the correct structure shift as thought. So but if you look now, you see there's a structure shift here, for which this is now a good demand zone, and this is another demand zone. So you wait for price to come back into those zones and give you a sweep of liquidity. Okay, so this is it. Wow, anytime we get it correct, it moves faster. So this is it. So this has swiped liquidity. Okay, that's swiped liquidity. So after the sweep of liquidity, any bullish candle you find could be your entry. And this is one bullish candle, this is another bullish candle. So you could use this one as your entry. And you just target this next supply zone up. Your stop loss should just be here, and this will give you a descent to RR. And price just goes and just smash your. Let's just do one more as I show you this, because of that one that failed, so you can understand that the strategy is actually a good strategy, but though may not give you winning all the time. So let's just see. So okay, so price, we're still going to look for bullish entries. Okay, even though this has shifted. So let's see the overall trend. So if you go to the higher time frame, you see the overall trend. Okay, so the overall trend in a higher time frame is bullish, as you can see, and in the overall trend, this is the demand zone. So it's what price does there that will make us know what to do. In this case, we might even get this sniper entry. This is how I get my sniper entry. For those of you who've been seeing me get sniper entry. So if I go down to 1 week time frame, all I need to do is to wait for structure shift. So you just watch closely. Okay, so I have a structure here which can give me my sniper entry. There's a structure here on this demand zone. So let's see if it's going to shift it. So if it shifts it, the first thing you do, you don't go sniper immediately. First of all, you catch the first move, which is to this. So you see it's very small. So because of that, we're going to go to a lower time frame, which is 24 hour. Okay, so because you see that move is very small, so let's just catch it. So what do? Don't go immediately. Wait for price to at least get back into this demand zone. So once price gets there, then we'll begin to look for liquidity sweep. Use my speed for my replay. I'm doing it fast so that I do not take much time on this video, but it's making it run so fast. So price, this is the order block, but the demand zone starts from here. So price actually came into the demand zone, as you can see. Okay, so the moment price came into the demand zone, you look for the bullish candle. So after this bearish candle, the next bullish candle, which is this, could be your entry. You could put your stop loss just below this. And where do you target? I told you, don't go perfectly sniper yet. So this should be your TP. Okay, so let's just see what price does. So price hits TP. Okay, now watch, price is going to return back, and this time around we're going to sniper because we've taken out every. This is it. In case you're wondering how that was TP, this is a supply zone. Okay, so that's why that was TP. So and now after that, the next one we're going to take now, once you get your clear confirmation on the, let's go to the higher time frame, the 1 week time frame. Once you get a clear confirmation, so this is your zone. If you have a clear confirmation, you should sniper from here and target the next supply zone on the highest time frame. So this gives you a descent. Sometimes can give you 10 hours. And those of you wondering how I used to catch those 10 hours, this is how. Okay, so you just target like this. So this is where we're coming. All this has been mitigated, so that's where we're coming. So if you go to 1 week time frame, you see how I set it. Clearer, can you see? So but you don't go in until you get a clear confirmation. So we're going to go down to 24 hours so you can see it clear. So this is your entry time frame. So you just wait closely and see what price does. So wait for liquidity sweep, wait for supply. That's it. So this is the liquidity zone, this is liquidity sweep. So this liquidity sweep can be a second entry, and this bullish order block can be an entry. Your stop loss should just be somewhere around here, and you're going, like I told you, 1 week time frame. So let's see if this sniper plays out as other snipers usually play for me. Oh sorry, let's see. Yeah, this one, let's see. This looks like it's going to pull us down. Let's see. This looks like it's going to pull us down. it's not been mitigated on the higher time frame. I didn't see that before. So let's go into the entry time frame. Let's see what that does. So that's a consign. So you're going to wait for that. Don't go in immediately. See what price will do with that first. Okay, so you see it was able to push down. So after it pushes down, it gives you this liquidity sweep. So this could be your entry. Your stop loss will be here. So going into the 1 week time frame, you can see that we have our sniper. Can you see? So we bring down our TP just to the part where we're targeting the move. So let's go down to 24 hours so we could see the move clearly and see how it goes straight up. So I'm trying to zoom in to show you on this time frame, but it's not coming out. So let's just go to 1 week time frame and let's see what it does. So you look closely, you see price. Oh, that didn't go as expected. So in this case, these zones made it a low probability setup because price keep reacting on this zone. So this is a strong supply zone and has rejected price from pushing up. So look out for all of this when you are making your setup. So this zone has rejected price to come down. So sniper entry failed, but from that, still on a low probability zone, we've got to a shift in structure. So let me give you one bearish move as I round up. So you just go for a shift in structure. You already have a supply zone here, right? And then you have another supply zone here. So what do? You wait for price to give you your liquidity sweep on those supply zones. The price keep rejecting on the supply zones, so we just want this structure here to shift. Once it shifts, then we can go bearish. Okay, for an A setup, you can see it's shifted already. All we need to do is wait for price again to return back into this zone, which price is already there, and then our stop loss should be on the previous higher low, or rather higher high, and our take profit should just go down to let's target this liquidity side first, because in this case this is a low probability setup because our price is just about to change structure. It hasn't really taken out this and this, so let's just target this first, see what the price does. So that happens to be the current place where price is, and it just probably ended and stopped here. So what that price was actually supposed to get at least to this zone. Oh, it's already entered into the zone. I teach, just like I've shown you, that's how I teach my students. I train them to be able to understand perfectly what to do in the market. A lot of people come into the market in confusion, like some of the basic things I've been hearing in this few times. Some people saying things like trading is sporty bet, trading is betting, trading is gambling. A lot of people saying many funny things, and you won't really blame them. It's because of what they experienced when they came into trading. But what you need to ask them is, take for instance, the United States nation is planning to use Bitcoin, which is crypto trading, to pay off $35 trillion debt that they have accrued over time. Now you're saying that the United States is about to gamble their debt if you say that crypto trading is gambling. Take for instance the bank trade Forex. You're saying that the banks gamble with your money. Okay, so Forex is not gambling, as many of them have said. Okay, it is not a guesswork. Okay, it is not betting. But if you, as a person, you are into Forex trading and you yet don't know what you're doing, what do I mean by you don't know what you're doing? You don't have a strategy. You don't even know how to trade. You don't even know what the market says. You don't have an edge. You don't know what is rules. A lot of things are still new to you. You don't understand what's really going on in the market. Then leave it. Trading is not for you. So you learn these basic things. If you go into it, you're going to act again to those people that are already condemning trading. You'll be one of a newcomer into that team, into that category. So, but if you would love to learn trading, then today hit up on our contact and let us know if you would love to join KFC Trading Academy, a beautiful academy where we're going to train you from zero knowledge of trading into professional stage of trading. We'll take you from unprofitability into profitability. In case you are trading and you are not a profitable trader, we'll take you from bad skill into better skill. Trading is a skill, and until you begin to see it that way, you're going to keep failing in trading. So hit up, let us know, and we'll get you on board for KFC Trading. Make sure you grab it now until the price goes up. Because the time you're charging $100, people take it for granted. Right now, I must tell you what we are charging for one-on-one is $1,000. Soon it may become $1,500 or $2,000. So, but if you can take the opportunity now, then you get it even in a more affordable price. See you soon.